could be, for example, let's say, sometimes I make it even very obvious. Let's say you have London open page range in here, you have London open here, makes a trap, but now you have the mitigation area in here. And for whatever reason, they stay short of it. And again, sometimes they show it even to you and they come back and failed the attempt, and this creates these equal highs or whatsoever. Then make the false break of structure, and then your brain should start and kick in and say like, oh, wait a second. That's like more like a build-up inducement to push price higher into the mitigation area. And then again, this might be then, of course, like whatever, 1030 or something like that. And that's how you're starting to put everything together. Again, you're starting with the daily cycle. Again, timing, Asian range, minor inducement. But then you also utilize the other cycles like build-up, inducement into mitigation, timing again, higher time frame mitigation areas with LX structure, right? Whatever, decisional maybe in here. Maybe there's a smart money trap in here. Now all of a sudden it makes a lot of sense, right? Because this may be the smart money trap. This becomes London, this becomes the inducement and the build-up. Now the final inducement into the mitigation with timing confirmed, whatsoever. Then you have internal break of structures maybe in here. This becomes another entry point here, and then it utilizes lower. It's just starting to put everything together and together and together. So again, if some concept right now will not completely make sense to you isolated, again, it will become easier the moment we're combining everything. For example, the smart money traps, as we covered earlier, they should be a little bit more obvious now to you. For example, again, if you have like this plane here, and then a very clean, whatever, imbalance area in here, of course, we expect, if the normal price action played out perfectly, that this area will be in. So again, that's the two times you definitely should note time. Because again, they use these times for whatever reason. I'm not whatever making these times up. It's literally times they're using all over the place with the enigma to either make a manipulation move, like inducing something, or mitigating the messed up delivery with imbalances. Okay, so let's say whatever, they made the move, London open, for whatever reason didn't grab enough liquidity, so they failed the attempt to push price lower because not enough people jumped in the buy side already. They used the manipulation minutes to either make the inducement to push price higher, to manipulate price higher, or because then they're pushing price lower, making it too quick and messing up the system, creating these imbalances in between, and then using the second manipulation minutes to push price higher again to mitigate and fairly deliver price, and then they push lower. So magic manipulation 1, magic manipulation 2. So that's why we have 2:30 and 12:30. It's German time. So that's 9:30 for you then, UK time, and 11:30. If you're better than a clock, it doesn't need to be to the minute, as we always say. But of course, you have a very good understanding. Oh shit, now it's manipulation minutes. They're starting to do something in here. They don't need to necessarily do something. If they did everything in order, of course, there can be nothing there. But if you see a clear mess up in the system, like imbalances or pure manipulation in terms of an inducement, you should understand, oh shit, they're using those minutes for doing so. It's because it's just the system. As you can see, the cycles are always the same. That's why they're using the London Open all the time. They switch it up to Frankfurt Open, or like, what a surprise. Again, but they just do it to confuse people a little bit more. But again, it's the same thing over and over again. The timing, as we said, is just a confluence, right? Again, it makes more sense if you see, oh shit, this push in here now gets mitigated, and you look at the clock and say, oh shit, it's literally 10:30 right now. So now it makes even more sense. It's not that, oh, now it's 10:30, I take a random side because Ryan told me. No, it's another additional confluence. If the whole structure makes sense, the whole daily cycle makes sense, and of course the intraday cycle makes sense, and then the timing also makes sense. See how that works? Of course, you need to look at price action and see if it actually makes sense there, right? That's why you say don't never use timing by itself. Use it as a confluence. It doesn't matter if it's like 5 minutes before. That's why you're smarter than a clock. And again, if they mitigate 10:15, you should be smart enough to see, oh, now they mitigated. I don't need to wait 50 more minutes because they mitigated now, right? That's why, whatever. Of course, you need to be smarter than a clock. That's why we only give you these times for obviously orientation. It should not be 10 because that's a little bit too far out. You have like a little bit buffer, as we have like a 1 hour buffer for, half an hour buffer for London Open. Again, you have a little bit of buffer, but it should not be like more than half an hour. Like this one, for example, here is the imbalance, right? But overall, whatever, we took this structure in here. But this imbalance starts from this point in here. And if you draw this line, you see the purple is a little bit thicker. They just stayed short of this little imbalance in here. So what do? Technically, this was London Open. Awesome. Faking the reversal. Never had an internal break of structure. So what do? They induce the inducement to now perfectly mitigate these imbalances in here. And when do they do it? Again, as to answer the question, not 10:30, but 10:40 this time. Okay, so 10 minutes short. Obviously, it's all about the same thing, trading the whole buy channel until, of course, they induce the inducement and now finally gets to the mitigation zone with timing.